Well, welcome back, everybody. It's great to be back here with you. First things first, I want to go ahead and wish a warm Happy Mother's Day to everybody, including my lovely wife, Sarah, who's gone ahead and been helping me through the last several weeks. And to that point, I want to go ahead and thank Hubert, Jake, Dr. Keith, and everybody who kind of stepped in and did some videos to keep information coming to you during this exciting time in the market. And thank you to all of you that went ahead and called into the office, emailed in, texted me directly, with well wishes and everything else. For those of you that maybe it's your first video with us or so, I had a surgery a few weeks ago that led to a series of complications on the back end. Ended up getting acute pancreatitis, and then ended up having some wild blood pressure swings. So I was in the hospital for several days after what was to be an important and serious original surgery, but led to a whole bunch of complications on the back end, and kind of a crazy time. So want to thank everybody, and again wish everybody a happy Mother's Day out there as well. So as we go ahead and kick off with this video, one of the key things, as you can imagine, I'm going to be focusing on today is this all-important area that I've talked to you about the last couple of years, or last year plus, and here we are still in this area. And what we do is we get these one bar closes down below, and then the next bar ends up being kind of some sort of retracement. Then we get a solid bar down, and recall what I'm looking for here is two solid bars closing down below this key support. And then some sort of retest and then a retracement to say, okay, this is now officially resistance, which would be very bad for the market from my perspective. So, but what happens is we keep getting these bars that close down below, and they're kind of timid. And so recall, the other day we had FOMC push us right back up, but into falling resistance. Then we come down with a fairly decent close. It was off the lows, but Thursday was fairly decent close down below. So then I'm like, okay, well, are we going to go ahead and into Friday then get a good solid close down below? And instead, what you'll see on both the S&P and the Dow, we actually are 45-50% off the lows in that downtrend. And to add to that, you'll notice that we actually have the accumulation bars right in the backdrop. So right there, you see these bars here on both the SPY and the Dow. So these are still key support levels until broken, right? And you can see how we're holding in. So one or more institutions is still buying up in this area or covering shorts, and that is keeping us held in that area. So with that being said, what I'm really watching here is, can we start to break down below this area? That would be very similar to, a traditional, you guys know I got my reverse inventory retracement bars, classic inventory retracement bars. And what I'm looking for in a downtrend, I'm looking to break one tick, one cent, one pip down below the low of those bars for continuation entries, right? So with that being said, it's the same concept here. Will we continue now to start to roll back down below this level? Now, a couple things that I'm watching here is the whole concept of positive analysis here, a positive divergence, because what if we are making a lower low in price but we're making a higher low in the underlying triggers, then I'm looking for a more meaningful reversal back up. So there's a couple things I'm watching in this area, and I will do the best I can to come back on here myself and share with you what my thoughts are on it. Now let's go ahead and take this analysis a couple levels deeper. So with the supposed to be a little bit longer video, since this is my first one back there, on an intraday basis, this leads to a lot of great opportunities, of course, focusing more so when the trend is down over here, and especially when we're down below these two support levels, preferring short side trades. So on an intraday basis, that opens up a lot of opportunities. Friday morning, we opened up. Immediately, we're in a sell side zone. We had a breakout forecaster. And remember, when we see those breakout forecasters, those little horizontal dashed lines, what that means to us is that we are expecting lower prices. And just as its name's implied, breakout forecaster in this case is the downside. We also then had a really important tool inside of wealth charts called the wealth signal. So but you had here the champion trend along with the breakout forecaster and wealth signal all talking about this. Then the very next bar here also is what we call that reverse inventory retracement bar. So then we're looking 1 tick, 1 cent, 1 pip below that bar as another opportunity. Needless to say, all this was taking place at approximately the 4105 area, and you can see, there was very quickly. These are 1 minute bars. The market went ahead and dropped down there roughly 40 points thereabouts, and that's like $2,000 a contract in a handful of minutes worth of opportunity. And so there's a lot of opportunity right now when you get these moves down below, because everybody's like, oh, this is it. And so you get kind of a pile-on effect, opening up some opportunities. Now, a couple of things with that. Don't forget some of the standard strategies I teach you them when we're in that downtrend, and especially like when we have this champion trend taking place in that. You see we get these stochastic spikes, right? And so these are really helpful as well when we're getting short-term pullbacks. So rather than getting into a trade, getting immediately pulled back, it goes back just far enough to stop you out, then goes back down. So like, okay, now it's going to go down for real. You jump in, then it pulls back just enough to go ahead and take you out, and then goes back down. The stochastic spike can really be very helpful there, especially when the classic spike is buried down here and you get the fast spike pushing up. That's a great opportunity. So don't forget about those, gang. And then, of course, in these downtrend moves, you're going to see these bars where you'll get those classic inventory retracement bars, the reverse ones that open up a lot of opportunities. When you've had in the backdrop multiple sell signals from within wealth charts there, that is a very powerful set of tools. One thing I would note though, for all of you that have like my Rob Hoffman ITP indicators, one thing to keep in mind here is like the trigger. So when you go ahead, I'll apply that real fast. Don't forget when we're talking about divergences. So you'll see right here as we push down, we had throttling, right? That's the fast trigger pushing beyond the core trigger there. Well, so what does that mean? That means once we pull back, we're expecting a lower low in price. Great. Now, if we have fresh throttling, we're making lower lows, and we have fresh throttling, that means, guess what? After a pullback, we're expecting a lower low. But now look what happened this last time here on Friday morning. You'll notice that we made a lower low in price, but we did not make a lower low with the trigger. And so sure enough, the market turned around here and actually did some retracing. So do keep that in mind. Really important, to take advantage of some of those powerful tools that you can add on within wealth charts and whatnot as well. But these some really neat things. And the whole concept of wealth charts, the whole concept of my Rob Hoffman ITP is it's a culmination of my life's work. And for instances, I used to tell people, hey, look, I've got my lovely daughter, my lovely little boy at home, and I'm going to be focusing more on them. And I always used to say, well, what happens if I get hit by a bus, right? And so the wealth charts and my ITP tools and TRP, those are the things meant to be there for you guys when I can't be. And sure enough, look what ends up happening. I have a standard but important surgery that then led to something much uglier. And end up being hospitalized and some touch and go moments there, and so it's just like, well, at least everybody had wealth charts, and many of you have ITP and TRP. So but I wanted to kind of show you how all that comes together. Now, then kind of taking it from there, if you recall, back in January and April, I had shared with you that the focus, and especially after February 24th with the the invasion of Ukraine and special operation, whatever you want to call it, special military operation, whatever you want to dub it, the bottom line is what we had talked about here since the beginning of the year was defense, energy, food, we're going to go ahead and be important. So when you take a look, despite all the market's challenges here, there's certain defense stocks that are doing really well, and you can, what's nice is you can kind of find some of these by going into wealth charts. You've got the whole sector scanner. We just made some really cool new improvements to sector scanner as well, so you find interesting opportunities like RADA, RADA. They do a lot of drone technology and different things like that. For drones and jets and everything. Think cameras, and that. Then, of course, obviously, we're seeing a lot of that activity these days. And so, here, same kind of thing as we're teaching these things, finding fresh buy zones, finding wealth signal indicators, finding all sorts of, different setups taking place. The breakout forecaster taking, and when we see that, what does that mean? That means we're expecting, more continuation. So, same kind of concept here. We can look for the pullback on the stochastics, right? As buying opportunities, re-entry opportunities from my perspective. Those standard tools that I teach all the time, like the IRBs and the reverse IRBs. So we like to go and see those types of things, and of course see a lot of those like here with RADA. Then as we look beyond defense, energy. So with energy here, you'll see we've had so many signals like on VLO, and VLO, this one's been on Wealth Scanner and IRB scanners, ITP scanners, I should say. A lot of different scans there that it's been on showing up. In fact, like just a handful of days ago in the S&P when it was going down, very few things were showing up. On out of 500 stocks, there was only two. One was Merck and one was VLO, and Merck went ahead and had kind of a negative divergence where it was making this higher high. In my ITP indicators making a lower low, so I wasn't really interested in that one. But VLO was making, all sorts of great strides here. So in fact, here we just go ahead and apply the ITP here for a moment to that as well, and kind of help make an understanding. So here, you'll notice back over here you had throttling, then right here, and then you made a higher high in price, but it made a lower high over here. So then it had a more significant pullback and consolidation. Then we started to take back off again, had triggering or throttling, excuse me, on the triggers, and then kind of had a negative divergence here again. So it had a little more significant pullback, and then back off to the races again. So all through this time, you were getting these throttlings indicating, these different higher highs before the pullbacks. And you'll notice that with the stochastics, for instance, those pullbacks end up being some pretty good opportunities. Here you had the classics stochastic going ahead and firing off there with the spike, and that led to the really nice basing before the move. So the point that I'm making with all this is that a lot of the classic analysis that I teach you has really been prevalent here. And then you get all the IRBs and the reverse IRBs, all those different strategies I've taught you, like at the Well 365 Summits, breaking above those, 1 tick, 1 cent, 1 pip, above those, depending what kind of market you're trading. A lot of really great opportunities to the long side here. Of course, obviously the short side has had different opportunities as well. But as I've been telling you since the beginning of the year, defense, energy, food are really important. And so VLO, being in the energy sector here, just an incredible run up. And I remember here when I was talking to my team just a week or two ago about like VLO. It's like, look at this, guys. What an opportunity from my perspective. And sure enough, nice continuation there. UNG, just one more example in the energy sector. Then we'll kind of continue on. Now, one thing about UNG, there is a negative divergence happening here now. You'll notice that. But what I want you to understand is, and just see in general, how this theme of energy, food defense has been very important. And then the strategies around that, if we zoom this in a little bit, you can see all sorts of the classic IRBs. So here we are in an uptrend, and so we're looking for, going long, 1 tick, 1 cent, 1 pip above the high of those bars is that strategy. And you can see a lot of that happening in the backdrop here. So I wanted you guys to I'm trying to put all this together for you. It's an extended video, but I want to kind of play catch up from the things I told you about in advance, and I've taught you with these strategies, and now we're kind of seeing the follow through. Same thing even here with Campbell's. And, people say, well, I don't really want to hold for several weeks in this crazy market. I'm a little bit nervous. Well, so, you can take these things down to a tighter time frame and look for the same concepts if you want to be in the market much less time. But like Campbell's Soup, right now, a lot of people discussing, food shortages and potential food shortages and everything else. So what are people doing? A lot of people are stocking up on cans of food, right? And, something that everybody should do. Everybody should have a supply, and I would strongly encourage everybody to have a supply of food at home. You can do that slowly over time. And I don't want to sound too preachy and everything, but I'll go ahead and just put that out there for everybody, just as a reminder. But a lot of people are taking advantage of that and are doing that. They're seeing, even like the baby formula shortages and that we're seeing right now, and different things like that. They're seeing the rising price now. So people are buying canned food and everything else, not knowing, what the future is going to bring with all the craziness in the world we're living in right now. So Campbell's Foods, what do you know, right? Going up, food. And I know a few months ago I was showing you some of the food alternative food type manufacturers and that, which I found in Sector Scanner and shared those with you. And so a lot of opportunities in the food supply industry. And the same concept you see here, that you're getting the well signal firing off, you're getting champion trend firing off, you're getting breakout forecaster. And what does that mean? After a pullback within and if you got the champion trend still taking place there, you get those pullbacks. Those are fresh re-entry opportunities from my perspective. And then all the different things. If we zoom this in a little bit here, you can see lots of the IRB, classic IRB, reverse IRB, classic IRB. So right, anytime you break 1 tick, 1 cent, 1 pip above the high of those in an uptrend, that's what you're kind of focusing on. So this opens up a lot of opportunities, and then you say, well, what else? Well, like the ETFs. So the TBT, right? If interest rates are going up, and we've talked about interest rates going up for some time, right? This is not a new phenomenon. We're seeing these, big jumps, half basis point jumps and that now, but this was all very well forecasted, very well telegraphed, by the Federal Reserve, and then, out there on the street, we were talking about this, right? And so if the interest rates are going up, that means likely bonds are going to be going down, right? Well, if the bonds are going down, but you are a long side investor only, you can look at things like TBT, inverse bond ETFs, for instance. And there's a lot of those choices. If you're trying to find some of the things that are the most exciting ETFs, you can go inside of Wealth Charts here, go into Algo Hunter, select ETFs, and look at which ones are the strongest alongside trades. Of course, you'll definitely see TBT there for sure, amongst several others, or go into Wealth Scanner and just drop it right on down to the ETFs if you want to go ahead and see some of the most exciting ones. And a lot of those are going to be the inverse, like with the bonds here. So there's significant opportunities, and going back for what we said January, right up through the April summit before I had the surgery. I had the summit happen. The week after the summit, we had the big surgery, and so all those things we talked about have kind of played out and kind of played through. And so use these powerful tools as you see fit, like with champion trend, well signal, breakout forecasters, IRBs and reverse IRBs. ETBs. That's what this whole combination power package is there of tools, and really great stuff there at your disposal. And we're going to continue to watch those sectors and more, and I'll try to update you on more things myself as I'm getting back into the swing of things, getting stronger every day there from the surgery. But this is why Wealth Charts was there. This is why my ITP and TRP are there, because I may not be, but that work of mine is there at your disposal in my absence. So with that being said, gang, you guys, thanks again. Happy Mother's Day to all of you wonderful moms out there. And thanks again for everybody who's been there for us, and looking forward to going ahead and seeing you guys in upcoming videos. But don't forget these concepts and strategies: defense, energy, food, and inverse ETFs, so much more that we'll be discussing with you in upcoming videos. Take care. Have a wonderful rest of your weekend, and thanks for being the world's greatest students. Take care, everybody. Bye-bye.